Hey there, welcome to Financial Freedom FX. This is the daily chart of silver against the US dollar, XAG USD, showing a clear structure of market movement between multiple supply and demand zones. At the current price level of $37.83, silver is attempting to recover after a recent pullback, and it's now trading inside a key resistance zone that lies between $37.47 and $37.90. This area previously acted as a strong support, and after breaking below it, the market is now retesting it from underneath, a classic case of support turned into resistance. If the price can successfully break and close above this zone, it will signal strong bullish momentum and may lead to a continuation toward the upper resistance near 39.52. Looking at the upper structure, there's a major supply zone between $39 and $39.52, which previously rejected price with heavy selling pressure. This rejection created multiple bearish candles, signaling aggressive sellers defending that level. These highs also appear to be relatively equal, indicating a potential liquidity trap where retail traders might place sell orders or stops above. If the price revisits this zone, it will be a critical decision point. Either we see another rejection, or smart money uses it to trigger a breakout and collect liquidity before reversing. On the downside, the first key demand zone is between 36.32 and 36.50. This area provided strong support in early August, where multiple candles wicked into it but failed to close below, indicating buyer absorption of sell pressure. This zone also aligns with a prior consolidation range from early July, strengthening its significance as a high-volume area. If silver retraces from current levels, this demand zone is likely to act as the first major level where buyers will step in again. Beneath that lies a deeper and stronger institutional demand zone, around 35.39 to 35.55. This level is where the market bounced sharply in mid-June and has since acted as a foundational support. A break below this zone would suggest significant weakness, but until then, it remains a stronghold for bullish price action. Candle structure also supports the bullish recovery narrative. A bullish engulfing pattern formed near the 36.32 demand zone, showing a powerful shift in momentum. Since then, the price has formed consecutive green candles, with the most recent ones pressing against the current resistance. However, the smaller size of these candles suggests the market is consolidating or preparing for a breakout. In terms of smart money concepts, this chart clearly shows engineered liquidity zones. The equal highs near 39.50 are a strong signal that a liquidity grab might occur if the price rallies upward. Meanwhile, the demand zones below, particularly 36.32 and 35.39, represent zones where smart money may reaccumulate before driving price higher. Switching to the 4-hour time frame, we get a more refined look at price behavior and the evolving market structure. The chart clearly illustrates a transition from a bearish structure to a potential bullish reversal, supported by the classic higher high, HH, higher low, HL, lower high, LH, and lower low, LL, labeling system. After silver reached a major swing high around 39.52, where the market formed a final HH, it entered a strong downtrend, making a series of lower highs and lower lows. This bearish leg began to lose momentum after price reached the demand zone between 36.32 and 35.87, where it bounced back strongly, forming the most recent LL at the bottom and starting a corrective phase upward. The key structural shift can be observed when price reclaimed the 37.47 level, a previously broken support now acting as resistance. The successful break and consolidation above this level indicate early signs of a market structure shift. This could potentially mark the transition from bearish to bullish trend if price begins to form a new series of higher highs and higher lows. The fact that price has now broken above previous minor LH zones with clean bullish candles confirms that buyers are regaining confidence, especially after absorbing sell-side pressure near the key demand area. Also worth noting is the behavior around the mid-supply zone at 37.90. Price is currently consolidating just below it, which is significant. If the market successfully closes above this zone, it would not only break a previous structural LH, but also signal a stronger move toward the higher resistance zone around $39.0, $39.52. This area remains the ultimate target for bullish continuation, but also the strongest resistance, as sellers previously dominated from there. The visual guidance of dotted support and resistance lines adds to the clarity of the structure. Green dotted lines suggest areas where bullish continuation may find support, while red dotted lines above hint at potential overhead resistance. The most recent candles indicate slowing momentum, but they have not yet shown rejection, meaning the market could be accumulating for the next push. So, after looking at the 4-hour chart, we can pretty much say what we figured out on the daily. A strong bounce from demand, a possible market structure shift, and a key resistance test underway. If this newly formed rally continues with follow-through above 37.90, silver could easily head toward the upper supply zone. However, if price fails here and forms another LH, traders must be cautious of a potential rejection back into the mid-zone. Either way, this is a key decision point in the market, and traders should watch closely for confirmation patterns before entering new positions. So, as we've seen across both the daily and 4-hour charts, silver, XAG USD, is now at a critical turning point. The recent bounce from demand zones, combined with a possible market structure shift, gives traders a valuable setup to watch. Whether you're looking for a breakout above resistance or a smart money trap forming at supply. These levels aren't just numbers. They represent real decisions made by institutions and retail traders alike. If you found this analysis helpful, don't forget to like the video, drop your thoughts in the comments, and subscribe to Financial Freedom FX for more deeply explained, real chart trading breakdowns. Until next time, stay patient, trade smart, and always respect your risk.